The Spin-off Podcast Network.
Hey Atlanta, Apple is open for small business. That's right. We're here to make starting and running your business simpler. With privacy and security built in on all devices, it's easy for you to protect your customers' data. And if you need hardware or software support, you'll get advice from business experts at no cost whatsoever. So you can focus more on the soup du jour and less on, the other stuff. At Apple, we're open for your small business. Go to apple.com/small business or visit an Apple store to learn more.
Kroger Delivery has one mission: to deliver the freshest food right to your door. That's why our drivers are pros. Our trucks are refrigerated. And when it comes to low prices, we always deliver. With $20 off your first order of $75 or more, there's no better time to get in on the action. Mission accomplished. Restrictions apply. See site for details.
When the Facts Change is brought to you by the Spin-off Podcast Network in partnership with Kiwibank, the bank for Kiwi looking to get ahead in business and in life. A bank that delivers expertise and banking know-how, smart advice for business owners wanting to invest, grow their business or diversify. A bank that adapts with technology through the lens of its people and customers. It is a bank with heart that is driven by its purpose. Kiwi, making Kiwi better off. Phew! We made it to 2025 and it's all going to get better from here. Or is it? The economy had a tough 2024 and now we're hoping that interest rate cuts will get us fired up and flying through 2025. But as we hear in this interview with Sabrina Delgado, an economist at Kiwibank, it may be a year of two halves. And there are some unusual things happening out there that we need to keep an eye on. In particular, how tariffs around the world with the inauguration of Donald Trump change the picture. Will they be inflationary or could they actually be deflationary? And now that inflation is below wage growth, how will that real wage growth flow through into spending in the economy? In this year that we hope to get a few breaks, 2025. Well, kia ora, and welcome to When the Facts Change to Sabrina Delgado, an economist at Kiwibank. Great to have you here at the beginning of the year.
Yeah, great to be back, Bernard.
So 2025, we were going to survive until 2025, and then things were going to get better. But how much better could the economy get?
Yeah, so, first of all, congrats. We've survived to 2025, as we were saying, sort of in June last year was when I was last here, and we were talking about what the sort of outlook had for the Kiwi economy. And now we've made it to 2025, and, we're personally quite excited because we are expecting a recovery this year. It's not going to be a very V-shaped, sharp recovery, but it's still a recovery. We finally have rate cuts from the Reserve Bank. We actually got them last year. And it's funny to think the last time I was here back in June, we were saying, we were really banging on the table for rate cuts to begin. The major consensus was that they weren't going to start till 2025, hence this real strong narrative of surviving until now. And then, come August, we did get rate cuts and we've actually gotten more than we had even expected. We are hopeful of a recovery this year and excited for what is in store.
So just to remind people, 125 basis points of rate cuts in the second half of 2024. As you say, when we spoke in June, the Reserve Bank was saying zip, nada, nothing. And then, bang, we got them. But how quickly does that flow through into the economy? And what are the mechanisms?
Yeah, so I think it definitely still takes time. There are a lag with these things, especially considering, New Zealand, we are a country that tends to fix for 1 to 2 years. Interestingly, though, as you mentioned that, what we saw in preparation for these sort of rate cuts is a lot of households and businesses were sort of gearing up for lower rate cuts potentially. So they were going out into fixing for rates shorter than 1 year. So generally, we would say monetary policy works with a lag of about 18, 24 months. Given this huge sort of inflow of people fixing for less than a year, we're expecting it to flow through faster this time. That's not to say that, we're going to see the improvement straight away. I think, from our point of view, 2025 is really a year of two halves. We still have a bit of an awkward period to get through as we wait for these rate cuts to come through. But the second half of 2025 is really what we're looking for.
Yeah, just thinking about how the New Zealand economy operates and where the money flows, which cracks and channels to go through to get the economy going again. Often it is focused on the real estate sector, with people buying and selling homes, freeing up equity they've been holding on to for a while, using that money to, decide to retire or to move house or to invest in a business, pay off debt. Often it's that volume of house sales that can drive activity purely as more people move house. They need to buy curtains and they need to renovate their houses, and they may get some spare equity and it's time to move to retire and buy a new car or whatever. Often it just gets things going. So what are we likely to see in terms of house sales volumes? Not necessarily prices, but volumes. When are we going to see that real pickup? Because it didn't really happen through, October, November, December, when some might have expected it.
Yeah, 2024 overall was just a bit of a sluggish year for the housing market in general. We did have a bit of hope for it. We thought maybe the surging net migration that we had in the first half of the year, that's definitely cooled down now, but that first sort of surge was maybe going to breathe a bit of life, but clearly the high interest rate environment was still trumping, and also the net migration inflows we were seeing were quite young too, so not really feeding into the actual buying of a property, more renting, which we did see in the inflation numbers as well back at the time. In terms of what we're going to see this year, I think we will, now that interest rates are coming off, and we do know that interest rates are the largest driver for the housing market, we do anticipate a pickup in not only house prices, but also in the volume of sales. We have been hearing that it has sort of been a bit of a buyer's market, and people have been holding off from putting up houses on sale, waiting for this recovery in house prices before they really make the jump. And we are seeing that listings in general have started to tick up, and we expect to see that continue this year as house prices gain momentum. That said, we say gain momentum, we are sort of forecasting house prices to lift around 5 to 7, call it 6% this year. So nothing crazy like those gains we saw during COVID, but definitely some moderate growth.
Because one of the factors there that's different from COVID, or during that COVID period, is that the restrictions are on again from the Reserve Bank. And not just the LVR restrictions, but the debt-to-income multiple restrictions, which kicked in the middle of last year. How is that going to affect the way that the economy recovers? Not having that ability to, push the accelerator down on lending, particularly to investors who are the ones most affected by the debt-to-income multiple controls.
Yeah, I think it's a bit of a mixed probably picture for investors out there, because on one hand, yes, you do have these DTIs put in place, which until recently, we've always said they're not really having an impact now because the level of lending is quite low, the speed's quite low. But, as that picks up, maybe we will start to see a bit of restriction there. But at the same time, then you've also got investors who are, they no longer have to have the bright line test has been reduced. They've also got interest deductibility reinstated. And then also it comes to a question of now that other investment opportunities, maybe say having even your money locked up in a term deposit, with rates coming down there, maybe that is more enticing for investors to say, okay, now it's time to get into property again.
So that's on the housing market side and what's happening with interest rates. Looking now at inflation, that's the thing we've all been talking about for endlessly for 2 or 3 years. And now we're back down to, where we should be. But does it feel like that? Because inflation of prices is interesting, but it's really the relationship with wage growth, which is the key thing. And in your outlook for 2025, you've got a really interesting chart showing what's happened to real wages over the last 20 years or so. Could you give us a sense of how that picture is changing from, over the last 2 or 3 years to this coming year and next year?
Yeah, so I guess breaking that down a bit more, I think it's always good to talk about the cost of living crisis that we're coming out of, which we always say was defined with consumer price inflation. So that's for your goods, your services, was actually running well above your wage growth. Usually it should be the other way around. And that's why, things felt so much more expensive. Yes, you were getting very attractive looking wage growth, but it wasn't keeping up with the rate that your consumer price goods was running at. What we're seeing now with inflation, back at basically 2%, and stabilizing at 2% this year, even though wage growth is slowing now with a slowing labour market, wage growth is running above that consumer price inflation. And so what we're going to see is now that, not quite yet, and it's going to take a while to feel it, but we are going to be entering a period of this real wage growth now.
When the Facts Change is brought to you in partnership with Kiwibank to help you understand the issues affecting the economy. And that's what their team of experts is here to do too. Here's Kiwibank's Chief Economist Jared Kerr with his prediction on what we can expect from the housing market and interest rates for 2024.
We've seen quite a correction in housing across the country. So house prices fell from the lofty levels that we saw in 2021. The Reserve Bank has pushed house prices down by design and by lifting interest rates to very eye-watering levels. I think the housing market has found a bottom, and I think we'll see house prices rising over 2024 and into 25-26. The housing market will be better balanced. We have seen a surge in migrants, which is adding demand to the housing market, and I think we'll see house prices naturally lift on the back of that surge in migration and hopefully an easing in interest rates later on.
Visit kiwibank.co.nz to stay up to date with detailed economic analysis and forecasts from Jared and other Kiwibank experts. They take big issues from both here and overseas and make them relevant to Kiwi businesses. Yeah, and the labour market is a key part of the economy. Often it's a lagging part, but in a way it can hold back things. If you're not confident about keeping your job, you're less likely to put down that deposit or look to start a business. Or if you're in a business, you can see that your customers aren't feeling particularly confident. So how is that labour market shaping up through 2025, both from a worker's point of view and also from an employer's point of view?
Yeah, I think it's interesting that you bring up confidence with that, because I think in our sort of outlook note, we talk about how there's a couple of tailwinds coming for the economy in terms of confidence. 1, that cost of living crisis is over. 2, interest rate cuts are here. 3, the housing market should recover. The one tailwind that we were saying is for 2025 is that the labour market still has a bit of deterioration to go from here, especially it's really in this first half of 2025 where unemployment is still tracked to pick up to about a peak of 5.3% as activity still takes time to pick back up. So it's definitely, we still have an awkward period to get through. And that, as you said, when people are thinking, hey, is my job on the line here, it does pull back on spending still. It does pull back on investment intentions as well.
Yeah, so that's on the confidence side of things from a consumer or worker point of view. But what about business confidence? How's that shaping up through 2025 and how might that translate into broader economic activity?
Yeah, so I think ever since we got the first rate cut from the Reserve Bank last year, and then even more so now with the extra 100 basis points since then, we've seen a real tick up in business confidence overall. I think, yesterday we just received the latest confidence numbers, and business confidence for the outlook is the highest it's been since 2017, And what we're seeing, though, is, confidence is one thing, and it's the first phase of the picture. But that needs to translate into these investment intentions, these hiring intentions to really get activity moving. And we're not quite seeing that yet, understandably so. I think, firms are still wanting to get a bit more stronger conviction that the recovery really is here. And I think that's when we're going to start to see things pick up in the second half of the year. Once those those 125 basis points of rate cuts that we had last year feed through more, but also because of the 125 basis points of rate cuts that we think are going to happen this year as well.
So that's good news for borrowers, potential rate cuts. But there's other stuff happening in the world. We've talked about surviving till 2025, but for a lot of people globally, it'll be surviving through 2025 under a new US administration that's talking about imposing tariffs. How much of an inflation risk is there for us because of potential tariffs under Trump?
Yeah, it's definitely the hot topic right now. What is the Trump administration going to mean globally? What does it mean for New Zealand? Is that going to be inflationary, deflationary? I mean, the truth is there's two potential outcomes. There's an upside, there's a downside. The upside, which is, I think what, financial market participants are really kind of clinging to right now is that it's going to be inflationary. And that's why, you've seen a lot of US dollar strength, Kiwi weakness. And that's not going to be necessarily good for our inflation outlook. With not only the Kiwis lower, that means our tradable inflation is going to be higher. But then at the same time, there's this other school of thought about it maybe being deflationary, particularly with thoughts around tariffs imposed on China, because we're thinking that sort of school of thought sort of revolves around, okay, the entry cost of these goods going to the US is going to be higher. They're going to be deviated away potentially from the US. Where are these Chinese goods going to go? Probably discounted maybe here to New Zealand. And especially China's a whole nother story as well, with their sort of weak economy right now as well, and them being our largest trading partner. So there's two schools of thoughts, really. I think, we're hopeful for the downside scenario, but it's definitely something that we are watching very closely.
Because also, if you see a trade shock from tariffs and an inflation shock, which slows down economic growth, potentially because the US Federal Reserve has to put up interest rates, or consumers in America suddenly feel like they've got less money to spend because the price of their cars and imports have gone up, particularly the ones from China that they buy through Walmart, it's potentially going to reduce overall activity globally and therefore reduce some of the heat in the economy which previously created inflation. So just thinking now about the specific examples of how that could translate into New Zealand. You talk about China. America is looking to reduce imports of EVs from China and all sorts of other consumer goods.
Yeah, that's the classic example we've been using. Are we going to get these cheaper EVs on the market here at home?
Let's hope so. And also, it won't just be America that's putting on the tariffs. You'll see the European Union putting tariffs on America and potentially other parts of the world. Canada, Mexico. So there is an opportunity here in a way for New Zealand, which is very unlikely to put tariffs onto imports, to be the beneficiary of, the lot of this production that's being not dumped, but having to be placed into the market at a lower price.
Yeah, that's the disinflationary impact that we could see. But of course, then there's also the upside risk that if it is inflationary as well, it's not hard to conceive of a world where, because of these tariffs, especially in the US, that we do see the Fed having to hike interest rates again, more US dollar strength, weaker Kiwi, higher imported inflation. And I think right now, especially if you look at the inflation profile that we have in New Zealand, inflation, it's at 2%, but a lot of that has been from these tradable imported prices. So there is a risk here where if tariffs do impose a higher inflation situation, that all of a sudden, hey, New Zealand inflation isn't at 2% anymore.
And then we get back into the story about interest rates. Just thinking then about the next couple of years, what should we be watching most closely to give us a heads up on which way it's going? What are the indicators we should keep an eye on?
Well, I mean, I have to say inflation is always the main thing to look at, because that's going to influence what the Reserve Bank does. And like I said, our view this year is that inflation is now going to be stabilising at 2%, which is going to allow the Reserve Bank to continue cutting interest rates. Our forecast is for the OCR to fall to 3%. And from there, that's when we start to see, an improvement in activity with lower rates here. So I'd say, definitely keep a lookout for those inflation numbers, even though, we do see it stabilising at 2%, what the Reserve Bank is doing. And I guess from here, from our point of view, for looking at actually seeing a pickup in growth in 2025, not just surviving anymore, as you said, when are we actually going to see things get a bit better? It is looking at whether the labour market has improved, and also those sort of investment and hiring intentions.
Fantastic. Sabrina Delgado, economist at Kiwibank, thank you very much for surviving through to 2025 and talking about the year ahead. Thank you very much. When the Facts Change was brought to you by the Spin-Off Podcast Network, together with Kiwibank. Visit kiwibank.co.nz to find out how Kiwibank are making Kiwi better off.
The Spin-Off Podcast Network.